Your position size in trading refers to the number of units that you buy or sell of a particular asset. For currencies, so Forex trading, this is usually measured in lots, and for futures, you'll typically be looking at the number of contracts. In this video, we'll discuss how this works for currencies, but the same principles largely apply for futures and other markets as well. They're pretty much the same. And as always, if you're learning to trade, check out the links in the description box down below if you want to learn more about the method that I've used for the past 2 decades and much more. So let's say that I want to go long Euro USD. That's a currency pair, the euro against the US dollar. And if I'm going long, it means effectively I'm buying. I'm looking to profit from the euro increasing in value against the dollar. So in other words, if Euro USD moves up, I'll be making a profit, and if it moves down, I'll be taking a loss. But how big that profit or loss is depends on 2 things. Firstly, how far the price actually moves, and secondly, how much of the asset I own. When we're talking about Forex, we usually measure price moves in terms of pips. We've already covered this in more detail in a separate video, but basically, 1 pip is typically the 4th decimal place for most currency pairs. For example, Euro USD, if that moves from 1.0745 up to 1.0746, that's a move of 1 pip. However, for some currency pairs, it's going to be a bit different, like dollar yen, that's the US dollar against the Japanese yen, where the pip will be the 2nd decimal place. So a move up from 133.88 to 133.89 will also be a 1 pip move. So we can measure how far the price has moved based on the number of pips. Easy peasy, right? Now, what about the amount of the asset that we own? Let's start with a really simple example first of all. Let's say that I can buy tomatoes for 15p each and I can sell them on to someone else for 20p each. So that means there's a 5p profit for me on each tomato that I sell. So if I own 100 tomatoes, so I've bought 100 tomatoes for 15p each and I sell them on for 20p each, that will now be a £5 profit because it's 5p per tomato and I've sold 100 of them. Now it's the same exact principle at play in the markets as well. So as I mentioned earlier, when we're trading currencies, we usually refer to our position sizes in terms of lots. In general, when we say lot, we're talking about a standard lot. A standard lot is typically 100,000 units of the base currency. So when we're looking at a currency pair, we have the base currency and the quote currency. A standard lot is 100,000 units of the base currency. Therefore, if I have a euro dollar trade and it's just 1 standard lot and the price moves just 1 pip, that's worth $10 to me. That's a value of 1 pip if my position size is 1 standard lot. So if the price moves 8 pips, what do you think? Well, that's going to be worth $80 to me. That's 8 pips at a value of $10 per pip. So if we're long 1 standard lot of Euro USD and the price moves up 5 pips, our 100,000 units of the base currency, euro, has increased in value by $50. Now you might be thinking to yourself, so hold on a second, does that mean I need to be able to afford at least 100,000 euros to be able to trade euro dollar? And that's a good question, but the answer is no, you don't need that much money. So firstly, most brokers will also offer mini lots and micro lots. A mini lot is 10,000 units of the base currency and a micro lot is 1,000 units of the base currency. Therefore, 1 mini lot will be $1 per pip and 1 micro lot will be 10 cents per pip. Now, when you open these trades in your platform, it will usually look like this. A whole number will be the number of standard lots, 1 decimal place will be the mini lots, and the 2nd decimal place will be micro lots. And there's also something else that allows you to trade these larger position sizes, and that's the use of leverage. This is offered by most Forex brokers, and it's the common way for people to trade Forex because it makes it much more practical and it means you only need a relatively small amount of capital in your account compared to the position size that you're trading. But I have to say you have to be really careful with leverage because while it can make your profits much bigger, it can also make your losses much bigger as well. So you should use it for like the practical uses of it and not so that you can just gamble away all of your capital. We'll discuss that in a separate video. So a common leverage amount is 30 to 1. This means for every 30 that you want to buy or sell, you have to put up 1. Now let me explain this in practical terms. Let's say you want to go long 1 standard lot of Euro USD. So without leverage, you'd need to buy the 100,000 euros. Instead, if you have 30 to 1 leverage, you just need to deposit the equivalent of 3,333 euros with your broker, and they'll lend you the rest of the money. In other words, your 1 has allowed you to buy 30 times that amount. In this case, your 1 is 3,333, and it's allowed you to buy 100,000, 30 to 1. Now, at the time of filming this, for one standard lot at 30 to 1 leverage, it would be around $3,500 or just under £3,000. And the higher your leverage amount, the less capital you have to leave as a deposit, and obviously the higher the position size, the higher the deposit's going to be. So based on what we just discussed, you can probably already figure out what the deposit would be for a mini lot and a micro lot. What do you think? So based on the standard lot, a mini lot would be that divided by 10, and a micro lot would be that divided by 100. Now that you know about position sizes and some basics of leverage, there are two things I'd recommend that you learn about next. Firstly, you'll need to understand leverage in a bit more detail to make sure that you use it safely. It's one of the common areas that cause traders to lose a lot of money when they get it wrong. So I really recommend learning that in a bit more detail. And secondly, you should learn how to figure out your percentage at risk on a trade. That will allow you to choose the right position size. Now, both of these videos are coming out soon on this channel, and when they're available, you'll see them on screen here. Don't forget to hit the like button if you found this helpful. I really appreciate you letting me know by doing that. And check out the links in the description box to find out more about how I've traded for the past 2 decades. Thanks for watching.